And I think it's better than even feared whisper numbers. Knee-jerk, the stock will be down like we saw in Microsoft. But I believe, especially with commentary going to March and June, much better than feared, especially given what we saw in China the whole month of December, which basically crushed
But how's
Christmas.
it better than feared? I mean, how's it really better than feared, excuse me, as they missed in so many different categories? I mean, let's be honest with ourselves here.
Well, first of all, they beat on services, and I think Stephanie talked about that's super important in terms of for the narrative on the growth side. And I think it just comes down to 8 to 10 million iPhone units, based on our estimates, basically shifted out of this quarter because of the shortages. So I think apples to apples, a miss, you're going to look at that knee-jerk and call like it is. But I believe as we go into March and June, that's actually going to benefit the March quarter and June quarter. And that's what I expect to hear from Cook. Caution with some optimism. And I think it's going to be similar as Microsoft. I think this is a stock that over the next 24, 48 hours is in the green, despite the knee-jerk here.
Malcolm, what do you think about what Dan has to say about what this company delivered? He makes good points, right? Some of the fear was that even if there is a demand issue because of supply concerns, et cetera, that the March quarter is going to be, they'll pull it all forward to the March quarter, so don't be too upset about it now.
Yeah, I think from a even bigger perspective with Apple, we may be setting up to find out just how impactful they still are with respect to the broader market, right? If Apple releases lackluster results again next quarter, right? I'm answering the question sort of that you asked me earlier about Microsoft, but applying it to Apple. If their shares sell off over the next couple quarters, but the rest of the market continues to rally, that could be indicative of things to come throughout the remainder of the year, like you're talking about. So it could matter in the short term, right, how much they're missing those iPhone sales units. I don't think there's really a substitute for the iPhone. I think either the recession is hitting you, you're pinching your pennies, and the replacement cycle for the iPhone might be a little bit longer than it has been in previous years because people don't have the cash to throw at another device that does the exact same thing. But I don't think that there's a substitute for the iPhone. So you're not trading down to something else necessarily. So I think we're finding out right now over the next 6 months, let's call it, or through the remainder of this year, if Apple is going to continue to be as impactful for the broader market, the S&P specifically, or if we're rotating to someone else becoming the more dominant leader.
Steve Kovac, I'm coming back to you. You just caught up with CEO Tim Cook. Is it supply, 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 as has been the refrain in recent quarters?
Yeah, I got some commentary from Mr. Cook for you on that, Scott. So, look, overall for the miss, he told me some of the factors to blame for it were, of course, foreign exchange, which has been a problem for Apple for a while, and in fact says sales would have grown on a constant currency basis, but the FX really hurt them there. Also, there's production delays that we know about in China. That was a big headwind for them. And then just overall macroeconomic factors, he said, were another thing. Now, let's talk about those production delays and demand. Here's what he told me about the production delays in China. Quote, in terms of production today, it's back to where we need it to be. And so that problem is behind us. Now, I pressed him on that. You know, production's where you need it to be. Does that mean it's back to 100%? He wouldn't necessarily say, yes, it's up to 100%, just that their production is fulfilling the demand they have right now. So not, super clear on where the demand stands for iPhone, but definitely some more color there from Mr. Cook. And then also on cost cutting, I asked him about that as we see layoffs and cost cuts across the big tech. Here's what he told me, quote, we're cutting costs. We're cutting hiring. We are being very prudent and deliberate on people that we hire. And so a number of areas in the company are not hiring at all. And then others are hiring that are associated in engineering primarily, end quote. So engineering, still a lot of hiring going on. But he, for the first time, coming out saying we're cutting hiring. Before, he was a little bit more muted in the commentary on that, Scott.
Yeah. All right, Steve. We'll talk to you in a few. So Dan Ives, quote unquote, macro factors cited by Tim Cook to Steve Kovac. Of course, we're going to read into that at this moment and say, is that code word for demand slowing?
Look, I think it depends on what part of the iPhone we're seeing. On 14, on the base model, we've seen that slow. But on 14 Pro, that's actually been strong. And that's important for ASPs. And Cook's clearly going to use the macro card. And I think that's a smart move here. You want street numbers to ultimately come down. But in my opinion, going into March, June, you have 225 million iPhones that haven't upgraded in 4 years. And that fundamentally is why there's a Rock of Gibraltar stock. Services beat. And I believe the reaction from the street when it's digested is actually going to be positive.
Yep, Stephanie Link, you've been writing down numbers fast and furious.
Okay, first
I've
and foremost,
seen you out of the corner of my eye.
No, but first and foremost, everybody's getting hit from currency, so that should not.
Which we haven't even mentioned yet. Right? And by the way, the dollar obviously is way down from where it was.
Sure, so maybe that will help in the latter part of the year. You know, I've been arguing for that, right? That's why I think kind of overall earnings might hold up a little bit better. But everybody has a currency problem, so I'm not even going to, let's move that along. Production delays getting fixed, that's good, but we obviously don't know anything about demand. So now we have to wait until next quarter or the quarter thereafter to see about the demand side of things. Macro, yep, you mentioned it. Everybody's seeing macro. And services, I don't really think that was a huge beat. 20.7 when the street was at 20.67, that's 4% growth. That's still a slowdown from double digits just a couple of quarters ago.
But maybe, as Dan would suggest to you, it's better than feared. Right, the bar is, I feel like the bar is still pretty low. Now, granted, these stocks have had a nice run since the beginning of the year, but the bar itself to hop over, as we've seen in earnings thus far, is kind of low, isn't it?
For some, well, I'll tell you, it's much lower for semiconductors than it is for these companies. I think people are still very much involved in these names. You know, I only own a 1% position in Apple in all three portfolios. So at 24 times forward estimates for 4% services growth that everybody got so excited about, to me, I just don't find that compelling.